Hey, what's going on, guys? I'm just going to give a quick little breakdown and a quick little update on the positioning, the opportunities that we have been talking about. There's been plenty of great opportunities, long and short side. Obviously, looking for the actual interim top within the S&P is quite difficult. However, it typically happens through, a post OPEX, or it typically happens through a series of binary events that can drive liquidity into some of these leaders and pull liquidity out of some of these leaders. And what I mean by drive liquidity into just a really nice increase in size on the tape, meaning sellers. um, and I think that could happen throughout the earnings window. We've already talked about the Apple for quite a bit now. I am not worried about trading the upside, and quite honestly, none of you guys that are trading the upside, you could ask yourself, is this worth it? Is it not? When I look at this chart, I don't think that's worth it at all. Options is about speed of a move. It's about how quick that move happens. And yeah, you guys that are trying to trade this thing through the resistance and just hoping it breaks, go ahead and do so. I'm not going to do that. And I already told you guys I do like the run up, but I like the redistribution after earnings just because it's would align in a spot that is of really, really good risk to reward. Everyone's talking about how this is a reaccumulation. I think that from the peak in December OPEX into the redistribution throughout February OPEX was a distributive top, right? That took a lot of time, right? And it happened throughout the beginning of July, right? People that don't understand distributions don't understand that topping is a process, right? So they get super shocked whenever things carry over the previous distribution zones highs. And then what we see is we see tightening candle spreads on this weekly chart. If I hide my drawings, you guys are able to see how the progression is stalling week by week as we look at these, buyers that are trying to hold above that all-time high and use the previous quarter one all-time high as a area of support, right? Which could happen, but we don't have a true strong back test here on the weekly time frame, right? And this could technically back test all the way down to 609. We're at 628. So, that's a decent amount of downside that we could potentially have in store. So yeah, Apple is going to be something that is definitely on my radar here. As you guys can see, the 200 SMA is sitting right around this gap fill right here at 224. The 200 SMA is sitting right around 222. 220 Psych's very big because this was the former support of the previous distribution zone, as you guys can see on my cursor, around 220. Yeah, and that's also the Japanese yen carry trades gap down point. So very big area within Apple, and I think that with a failure to expand and expand aggressively and expand with velocity and size behind the move, I think that this is going to result in a redistribution, and I think the redistribution could be a much better opportunity from a risk to reward perspective, from a psychological perspective than what this long could be. Like I said, you guys that are hoping for this to see an earnings run up and it trades horrendously. It's almost like you need to hope for a headline at a point where you don't even know if a headline's really going to hit unless you get very clear signs of like dry volume. Um, could find a headline, and I would honestly love to see a headline on Apple leading into the report, a pop on the report, fill the gap, put in a distributive candle on earnings, and then I'll really be all over this one. Now we'll go over into NVIDIA because this was another one of those things where, the headline right here really did not make sense. I honestly think that this came out because it looked like buyers were really exhausting, and we were actually correct on that throughout the Friday into the Monday range, right? Because this was a fade from like 167.50 all the way down to 162. So it was successfully working. And then it put in like a neutral spread candle here at the top of the trend, and as well as a reversal bar. And then we got this random headline subsequently to that headline, just as we talked about with like the candle spreads on the weekly chart for the S&P. We'll talk about NVIDIA here in a moment. But yeah, I mean, this is a distributive chart on the weekly time frame. Distribution happening all throughout June, all throughout quarter one, all throughout February and March, and then obviously the bottom that took out the August 5th low into that April 9th bottom. April 7th bottom, I should say, that we did catch. And now we're seeing this really nice historic V-shaped recovery action happening almost to the point where it feels like a bubble, right? And we get up into this territory here where you're getting these gap ups at the top of the trend, and the action, subsequently to that, it sweeps the gap and then doesn't find a strong buyer, rolls over into the Friday session with a weak opening range, and then boom, here we are, right? Fails, opens right on that opening of the gap, and then it pulls into where the gap is partially unfilled from 168 all the way down to 164, 169 technically. So this was a very large fade again today, and I caught a base hit on this one. Pretty nice trade on this. Not anything that I was just super thrilled about, but they're displaying weakness, right? So, you have a lot of these areas of the market displaying weakness, right? You have Google still a reversion trade where it's trying to meet its bear gap from this first quarter report, whenever a lot of tech was, very distributive. And some of these names aren't even meeting their all-time highs, right? Like Tesla, for example, like Apple, like Amazon, like um, basically, like even Meta, it couldn't even barely make past it. It couldn't even really get through its previous all-time high in quarter one, right? So you could see how the amount of significance behind some of these names, it's crazy as to how they're carrying the market higher. And the other names are just completely extended in the middle of nowhere at all-time highs or around all-time highs where they're tough to trade, right? So Nvidia was really only the cleanest opportunity I could find this week. Within the tech sector. So now we go into some of these other opportunities that we've been talking about. Johnson and Johnson earnings, fantastic opportunity over here. To me, this is one of those really nice trades, especially after you find that earnings candle and then like 3 inside bars where you're letting the 9 catch up closer to price. I would have really liked for this one to pull down into 162. I have shares on this one. We discussed the opportunity within the Johnson & Johnson leading into the report, the upside gap, path of least resistance over here built off of like 170, 157.70, unfilled gap starting from 162, filling up to 166, and then you have a really strong earnings footprint filling that gap. Subsequently to that, you get little to no strong seller action, just 3 inside bars, where then you have more opportunity to trade the upside on a claim of 166, or just throughout this base, adding into like your hourly EMAs, kind of catching up to price, adding into these higher lows, and then, risking a low a day like the Thursday low, or risking all the way down to 162 and planning on adding into 162, and then holding with a trailing over 166. Really nice opportunity over there within Johnson & Johnson, one of my favorite earnings picks that we have discussed, and the same over with Pepsi. So typically with these market corrections and topping processes, you will see these cyclical rotations happening into some of these defensive names. And then you'll see bubble-like moves and very euphoric moves happening within risk-on sectors. So whenever you're seeing a lot of these mid-caps go crazy, we just had Quantum, we have a bunch of these AI tickers that have went crazy. It almost feels like a bubble, and then under the hood, you'll have an actual real rotation from a more on the passive side, where you have these names like Pepsi, like consumers, for example, that are showing signs of potentially seeing really nice sector rotations, right? So volume is a big part of our edge on things we could see happening from big money, and you could see how you had a lot of preliminary accumulation happening within, and it's so funny how the charts are completely backwards actually. You get your preliminary accumulation happening throughout quarter one when tech was in a sequence of distribution, right? However, tech was not seeing its full leg to the downside, right? And then you had the consumers actually seeing their leg to the downside, breaking through these supports like this into the next into the next phase of market distribution, right? So all of the market basically corrected, and that's why you had the S&P at such a very nasty level of a sell-off, right? And then what happened was we completely built out a base as the S&P rallied into these all-time highs leading into Q2, right? And then leading into Q2, we talk about how this is a major inflection point with new rotations, new money, reallocating into different areas. And Pepsi was coming right off of this low that was the lowest low to grab inventory from the bottom of this base, and then it, successfully found its expansion, and it got over top of 133, right into the earnings, and then it built out a high tight flag above the EMAs. Really nice beat on earnings with a double beat EPS and revenue. And then boom, you reclaim the preliminary accumulation support floor at 141.50, and then you sweep into the peg, and now you find a really nice strong buyer once again, right? So very dominant volume patterns over here within Pepsi, as you guys can see throughout the volume profile. We've had some of the biggest volume actually at the bottom of this range, right? So this is very, very notable to me. And I think that this is under a bigger accumulation. And I think that you go over into some of these other sectors. We'll actually go into some of the sectors and we'll take a look at every individual sector here, guys. But for example, we go to the hourly chart and we can see how nasty orb projection within the tech sector. And then you go over into XLF, for example. Really nothing notable in terms of volume within the XLF sector. However, we're sitting right at those highs. We have an inside bar traded here today. And then you go over into some of these other names like XLP, right? And like I said, this happens into big inflection points. We have a very, very large support that has been built ever since the market's bottom, right? And this has been an underperforming sector as you guys can see, but it oftentimes results in a really nice rotation after these OPEX windows or into these tech earnings where you have these events that can distribute tech, of course, right? So we take a look at here and we can see how on the volume profile here on like your hourly and whatever time frame you really want to use. I mean, the hourly, look at that volume right there. That was traded right off the open today. That is the biggest volume that we've ever seen within this sector ever since all the way back in April 9th, whenever the sector was up, the S&P bottomed and found a record-breaking reversal, and this thing reversed 3%, right? Crazy, right? So we're seeing, very unusual volume traded here today, and as you guys can see, it's like almost double. I would say probably 30 to 40% higher than what most opening ranges are here for consumers. So there was definitely some unusual trading action happening over there. We go over into like XLE and we can see how there's really nothing notable, right? So basically what we're looking at here is that healthcare is strong. It doesn't have the amount of unusual volume that the consumer sector has. And then you're seeing side by side to that, what you're seeing is these distributive tops where we already had our opportunity. We discussed the opportunity. I cannot talk. And what that opportunity was it was trading the S&P back through the NWOG, right? So this was the NWOG. They were bidding it down. And then what we had was we had a new range being built on the SPY hourly and the SPY 4-hour. And then what happens is you get your highs kind of exhausting and these higher highs failing to break through. But what we talked about on the S&P was we talked about how, and on NQ was we talked about the 3 lower low that was taking place within like QQQ's hourly. If you guys go to the QQQ hourly, you could see how each and every single one of these new lower lows were being bid. It's almost, reminds me, it's almost reminiscent whenever we go back over here to the 593 long that we talked about within the S&P, these lower lows that were being bought into the gap, and boom, up here, QQQ, lower lows that were being bought into this gap, right? And we have a new range being built, but there's no up thrust above. If you guys know what an up thrust is, it's a point where range is being built, and then you have a push over the high, and then you have a failure to break and base over top of that high to the point where, buyers, that's a signal that buyers are losing strength. I'm trying to explain this in a very easy way. But an up thrust does not mean that that's the top. It means that it's going to rally back into the range. And what is then going to happen is you're going to likely get a buyer stop rate where then you get a retest into the lower extremes, and then you could get a rally back to the upside. And then you just want to keep monitoring the highs to see whether or not it's distribution. And I think that we had a throughout the Friday session, we saw that, buyers were definitely exhausted up here. So we understood within QQQ and within most of tech, let alone the other sectors possibly, but with most of tech that we have been analyzing, QQQ futures or NQ futures were definitely looking a little bit exhausted. Now, what do we tie in with how we trade? What do we look at with how we trade? We look at, dark pool data sets tying in together, and most importantly, um, we look at bidding the market down, right? So whenever you get extensions away within a distribution and then you get a new week opening gap and you start to see dark pools bid the market down into the bottom of these gaps, and then you start to see, tech exhausting at their highs within these buy climaxes that are happening on hourly time frames. We even just talked about in the Discord how SMH was very, very, very exhausted, right? And this was just yesterday. You guys could see right here, we talked about SMH and how that is in an exhaustion state. Here, let me find it. Oops. Sorry, guys. Hold on. Oh, here we are. Okay. I forgot I could just look up the stuff. Okay, so I pulled it to the side of the screen here. SMH yesterday, highs are exhausting on SMH here with little progression made day by day from buyers. They need to break this stuff where it's going to fail and get shit on. So that's exactly what we were looking at, and that's exactly how everything played out. In terms of we go over to SMH and we can see I'm showing you an example of a higher high buy climax happening on like where buyers are exhausting, and you could see how buyers just could not get it through like these highs, and they were having a really hard time. And then obviously that results in the market rolling over and back into its support, and then you reevaluate off that support. Now we have a very big support that is now breaking through in the extended hour session, right? And this is kind of including that futures pop, but that's also kind of being given back right now. But yeah, so that's going on over there, right? You have Apple with that resistance with the bear gap above. You have Nvidia, obviously, within a 4-hour time frame here that doesn't look the greatest. Do we have enough range to be able to tell whether or not a top is in? No, but this was a short side vehicle we discussed to fill the gap, right? The bottom of the gap is target. It doesn't mean that this is going to just completely plummet on the weekly time frame and give up all of these weeks of price action just in an instant. You never want to trade like that. But really nice fade opportunities over there, right? You have Google, reverting to the upside. The true laggard trade. This was not the laggard trade. So yeah, I mean, you could see the exhaustion happening also within like Microsoft, for example. I don't know if we covered this yet, but yeah, basically that's all we were looking at. And then we go over now into the indexes. Boom, what we had was we had our up thrust, we had our highs exhausting into the Friday session. What we wanted to see was an early week rally for then the reversal. We already talked about this. It was the early week rally, and I even said don't stare at the reversal if we pop early week this time, and that was yesterday, right? So that was yesterday at midnight. So that was leading into the opening session here Monday. And that's exactly what happened. And then they started to bid the market down, right? So we had a really nasty sell-off into today's open, and we left behind a big imbalance within this trend, right? So we go over to like the NQ futures, and then we can take a look at this, and we could take a look at QQQ, for example, and see how this was basically basing underneath of that NWOG now, and using that now as, you know, possibly a progression. That could be a state in where you find lower highs coming off of that, and then we, you know, maybe pull back down into the range. We break and base underneath 626.27, and then it becomes much, much, much uglier from there, right? But we take a look at this, and we really, really, really break down this chart, and we see the highs exhausting, and we see how, you know, there was no true significant UTAD. There was one for the time being here until you reacted the price, and you saw how this was it did not sweep out buyers. It might have in the cash. Yeah, it did in the cash session here, but very, very large volume within the S&P at that bottom, and didn't sweep out the buyers on the S&P, right? You guys go over to the QQQ, and it technically did ever so slightly. So that was almost like your fourth lower low of accumulation taking place there. So now with all of these tests of support off of this one area here, we can now theoretically say that this would be a path of least resistance if we were to then go retest that point. So that was like an up thrust, and then we saw highs exhaust again once into the Friday. We got the bull NWOG, we got the rally early, we got the fill of the NWOG. Now we're trying to break and base beneath the NWOG and hold that spot. And now we could go into the smaller time frame. We'll talk about what we did today. Trim some profits today within NVIDIA. Trim some profits today within SPY as price target 1 was tapped at the NWOG. And we also got the level we've been talking about here at 626.27, which is this 4-hour breakout point that we are trying to use as support now. So this is a very big trading session low here created on Tuesday, and not to mention we go over into the QQQ. We could see how the move from peak all the way to trough was a very, very, very imbalanced move, meaning that you guys go to the hourly, you guys take a look at the hourly without just regular hours, regular cash session here, and you can see how, you know, this happened in a very quick manner. And typically with UTADs, you want to see a test, meaning a rally to rebalance the sell-off, and then a lower high subsequently, right? So we go to QQQ, and we can see on QQQ futures now how the 0.50 from all the way at the peak all the way to the bottom was hit off of this headline, right? So now what we want to see is basically QQQ remain to hold underneath of that NWOG, which is basically right around the 50 as well. It's right here at 23,256. And if we were able to hold underneath that, that would be a valid area of a risk spot, and looking for obviously the continuation to the downside to then go fail 23,102 on the daily chart, right? Which is the Tuesday low that we discussed, and it's this breakout on the daily, on this daily level here as well at where you had all of this new range being built, followed by the expansion. So essentially a daily candle closure beneath that, basically today or tomorrow's candle that, you know, closes beneath that would look not so great, right? And then you go to the weekly chart, and you could see how that really wouldn't look so great either, because if we got beneath that and then buyers started to capitulate off of something into the Friday, and we were to engulf that, that is now technically a valid reversal bar where we're only sitting how many points off of the highs. And this could all be, and it doesn't have to happen this week. It can happen next week, for example, when it likely wouldn't be an engulfing. But if we back tested the lower extremes of this and then close beneath, we're only looking at a push and a rally of 2.2% on the NASDAQ over top of the previous highs, right? So, you know, with all of that being said, a reversal bar that looks like a UTAD on the weekly chart can come at any moment, right? It could happen through earnings, it could happen through trade deals, it could happen through almost anything. And the probabilities of this stuff happening, they gradually increase as you get to window by window by window throughout these OPEX windows, and into these windows where there's also, earnings tied into it and whatnot. So um, everything is kind of connected together in terms of when a distribution takes place. And this is why our last super heavy conviction short side trade that was, we were looking for, days of continuation. We had a few throughout this range that we thought were pretty promising, and they did bring moves, just not anything crazy, only like 0.5%, like 1% here, and like that's about it. But over here was May OPEX, right? And you could see how throughout these OPEX windows, like for example, you have February OPEX actually as the UTAD candle, right? Right here you have February OPEX as the UTAD candle, right? Leading into the December OPEX 2 days prior to that, you have a minus 3% move within the market, right? And you get over here maybe to like July OPEX, and you could see, July 19th, which would be July OPEX, is, where you're sitting at 554. Subsequently to July OPEX, what do you get? You get a downside move of 8% within 17 days. Not that that's going to happen again. I'm just saying that these are very big inflection points here for the market, right? April 19th, bottom within the S&P. That would also be an OPEX state, which that's a little bit weird that's a bottom. But I'm just saying that these are very major inflection points, and you can tie those in with accumulation and distribution schematics, and it's pretty easy to tell. I'm not going to get into the dealer side of things and the positioning here on the dealer end, but yeah, that's basically all we're looking for here within the bigger perspective of the market. We go over into some of these tech charts, and we can see how these earnings are going to be in very, very critical points here for the market as we move forward. And with these things aligning at particular areas on the charts leading into earnings, or even after earnings, or into the open after an earnings report, those earnings candles are going to be very, very big here for market in its direction here moving forward, within your mega caps like your tech and everything like that, right? So very, very, very good market here still with several sectors outside. I'm just trading shares right now. I don't really need to trade options. I feel like you guys, always are, a lot of you guys always want to take an options trade, and you can. It's just I stay very selective with what my options trades are in terms of like swings at the current moment, just because there's so many good charts that can kind of get you carried away to where you really have to limit things, and you really have to, keep things down to a very simple view of just taking a few, holding those, and getting a super nice risk to reward and a super nice win on some of these trades, and that's tough right now within like your mega cap tech. So we have to wait for these events to bring volatility. I will also mention within the economic calendar we have some pretty notable things next week, I believe, with like CPI. So we'll see what goes on there, and we'll see where NQ opens up tomorrow. Because if it were to open at a point where everything makes sense for this to be a UTAD test, then this can become a super good risk reward trade here for the downside, as we lead into the earnings. But we do have to be aware of the earnings run-ups. So yeah, there's nothing, I'm not speaking very confidently about anything right now. It would have been better if we built out a little bit of range here, and then we got the reversal and we didn't fill the NWOG, and then we got like a lower high, and then we could have been able to trade this as an intraday mover through just a singular cash session to meet the NWOG, which would have been a really nice win on like a 1 week to expiration type of deal here. but unfortunately the market did not allow for that and the criteria wasn't there. So I will be trying some shorts as the structure develops here. We have to wait and see where we open into tomorrow. QQQ futures right now are flat. You're slight green within the S&P's futures. So we'll see where that opens into tomorrow. But you know, for example, we took a short here off of like um, the bottom of the end log, failed, invalidated, and I even said, you know, these things can fail. I took it right off discount. I went up like 22% right here at 627, and then it rallied back into break even. I went down 10% and I stopped. Big deal, big whoop. But those trades will show their hand a little bit more and become a little bit more trustable as we move forward. So just be very patient, guys. That's all there really is to it.